Hey everyone. Today we're going to take a look at the August 2023 market update stats for San Antonio, Texas. Keep watching for our bold prediction on where home prices and appreciation are headed for the rest of 2023 here in San Antonio, Texas.
Hi, this is Real Estate with Alyse and Jay.
And that's Jay, and I'm Alyse. If you're a realtor, we would love to help you become the local market expert in your area. Our information is in the description, so please feel free to reach out to us.
Yep, that's right. If you have any questions, please feel free to call, text, or email us.
So let's look at our market update for August of 2023. This is compared to August of 2022, so keep that in mind. We sold a total of 3,168 homes. That is down 4%. Our average home price was $387,844, and that is no change from last August. Our median home price is $322,250, and that's down 1% from last year. And our original list price to close is 94.7%. That's showing that the market is slowing. Sometimes it's over 100%. Our days on market are 56, and that is up 81%. Last August, it was 31 days. So that's almost a full month. Homes are sitting on the market longer. Our price per square foot is down 2%, and we were at $182 per square foot. Our months of inventory are 3.9. So for a reminder, anything less than 4.6 months of inventory is a seller's market. Anything over 4.6 months of inventory is a buyer's market. So in June, we're 3.7, in July, 3.8, and now 3.9 in August. Things are creeping up. So let's see where this goes into the near future, because fall and the holiday season are traditionally slower. Our average rental in San Antonio is $1,886. And now let's talk about Texas. For Dallas County, which of course is Dallas, $375,000 was the median price. Harris County, the median price was $330,000. That's Houston. Travis County, which is Austin, is $664,250. And Bexar County here in San Antonio, our median price is $300,000. So what that is showing us is that here in San Antonio, we're 10% more affordable than Houston and a lot more affordable than Austin and Dallas.
And as we get into those numbers, just a quick correction. That was $564,000, not 600. So
oh, sorry.
That's all right. That's all right.
All right.
Nothing's perfect, right? Everybody's asking, what are the mortgage interest rates? What are they doing? What's going on with that stuff? So we're just going to kind of go over that a little bit, try to help you out. But interest rates have really been all over the place lately. I've seen weeks where they're at a high on Monday, at a low on Wednesday, and then back up again on Friday. So they're just really bouncing around. But the people that set the rates and take care of monetary policy and all that kind of stuff, I think they're trying to guide us in or glide us into like a soft landing kind of scenario. But I feel it's been really turbulent on that short term, from week to week, day to day, with these quick up and down jumps. And as of last week, just to give you an idea, rates were just under 7%. And of course, that's depending on your credit and your debt to income and all that kind of information. But compared it to 2 years ago, when you could still get a rate in the high twos or even the mid threes, something like that, the twos and threes were not unheard of. That's more than doubled now. And as you can see, just historically, rates have never gone up this high, this fast before. So bottom line means that interest rates are still at about the highest that they've been all year. But the important thing to watch is going to be inflation, because as inflation comes down, rates should follow. And if we have that little bit of a bumpy ride like we have been, then the rates will going to continue to kind of bounce around like they have been. So just keep an eye on the inflation numbers if you're interested in that stuff.
We're nerds.
All right. So, Alyse, what are you seeing in the market in regards to interest rates and inventory with real home buyers and home sellers? What's going on out there?
So the best way to explain it right now is that from the numbers, things are starting to slow, and we're getting closer to a balanced market. We do fully expect the rates to drop in the next 12 to 18 months. And I know this may sound counterintuitive, but if you're going to buy, or if you want to buy, or you need to buy, go ahead and do it now while rates are up. I know that sounds funky, but here's an example. Buy now, the prices are lower, and sellers are giving between $7,000 and $10,000 in sellers concessions. And we don't have a lot of competition and not as many multiple offers. So you can certainly get a nice home right now, and sellers are giving you concessions. So when rates drop in another year or so, the same home is going to be at least 2% higher due to appreciation and pent up demand, and all the buyers that are waiting for rates to drop will be in the market. So more competition and more multiple offers. So the more active buyers means the months of inventory will be down, down, making it a stronger seller's market with little to no seller's concessions.
Yeah, overall, I think now, just like you're explaining, I think you can get buyers into the market with less out of their pocket. And we'll discuss some options down the road as well. So here's our bold prediction. And thanks again for watching this far. So now we're going to talk about interest rates and how low inventory are affecting home sales. So the easiest way to see this is between new home sales versus existing home sales. And existing home sales are down 16% right now, while new home sales are up 35%. And that means that swing between them is just over 50%. And that's a big swing, really. So the story is still the same, right? Inventory is tight. And as long as that remains the case and continues, housing prices are going to stay strong. It's just a supply and demand issue. And in my opinion, that means here in San Antonio, things are going to be either flat, kind of like we're seeing now, or they're going to be ticking up slightly higher as far as prices go. And don't get nervous or scared, because I'm not talking about like big double-digit gains like in 2020 and 2021. And really, those were like anomaly years for the entire real estate market. So I think we'll be back to that slow and steady gains that San Antonio is kind of historically known for. I think historically, we're always in that kind of 5 to 7% slow and steady appreciation gains year after year. And I think it might even be slower than that. Call it 3%, 5%, just kind of chugging along, but slightly higher. And that should be pretty exciting for us to see a more stable market again.
And if you're a realtor, pay attention to this. Right now, your buyers can still get a whole lot from sellers. We just need to be better at helping them understand the market.
That's exactly right, Alyse. And so here's an example that you can use to help your buyers understand that. So if they buy a house today at $300,000 with today's rate, their payment with P&I, just so it's the same across the board, it's going to be about $1,945 a month. So let's say in 18 months with a really low appreciation rate of 2.5%, we're going to say their house is now worth, in 18 months, it's worth $307,500. Plus they've paid down for 18 months. So now they only owe $295,000 on the house. So they have both equity and appreciation in a positive way in their favor, right? So now let's look at the other side of that coin, right? If rates drop in 18 months, and we're going to say by a full 2 points, right? Which would be a pretty significant drop. That same $300,000 house, now with a little bit of appreciation, it's going to be worth about 310. Plus, if we see the big surge from buyers that we're expecting to see from that pent-up demand, when they come flooding back into the market, we're likely to see multiple offers and less inventory, which are going to drive up prices. So all in all, we're looking at something like that. Today's house of $300,000, tomorrow that same house is going to be about $315,000 to get into. And now we're talking about getting in with no seller concessions. And remember, right now, sellers are giving away big chunks of money. $10,000 in concessions isn't unheard of, right? So that's more out of pocket for your buyer to own the house, right? And their payment is going to be around $1,645 on that $315,000 house, right? So that's $300 less a month out of their pocket. And that's a really significant number. But again, if they bought that $300,000 house and the rates drop, the buyers are in the best of both worlds, because now they can refinance into that new rate. And if they do that, even with the closing costs rolled into the new loan, their payment is only going to be around $1,540 a month. And that's a huge savings. That's saving them over $105 a month. Plus they have equity and appreciation, and they spent less out of pocket in terms of the seller concessions. Plus they did that all with less stress and no competition of like the multiple offers and the hurry, all that kind of stuff. So it's really in the buyer's favor. And this is if they need to make that move. I don't think you should just be out buying willy-nilly right now. But that's definitely something to think about and something to express to your buyers. And it'll really kind of start setting you apart as that expert.
All right. So if you would like to grow your real estate sales, build wealth, and have the life you dreamed of when you first got into real estate, we would love to help you get there. Our information is in the description.
Yes, just like Alyse said, we'd love to help you out. We've been through the ringer, so we know how it goes, and we can really help you shave a lot of time off of your learning curve. But just call us, text us, or email us. And again, thanks for watching. And as we like to say,
Keep Boston weird.
keep San Antonio cool.